as is usually the case when the stock market experiences increasing volatility, defensive companies or companies that are known as defensive companies like Coca-Cola and Pepsi experience a lesser degree of volatility. Those speculative investments, those that have higher risk like Tesla and Palantir and Nvidia, those experience greater volatility than companies like Coca-Cola and PepsiCo. So for investors that want to add some lower risk stocks to their portfolios, Coca-Cola and Pepsi are excellent choices. But which one? I'll answer that question in this video, comparing these two companies on critically important metrics, including revenue growth, cash flow from operations, returns on investor capital. And then I'll share with you my proprietary discounted cash flow models that calculates a fair value for PepsiCo and Coca-Cola stock. I'll also look at valuation on a forward price to earnings basis to get another perspective on which stock is the better buy at current valuations. I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. Let's start with the revenue growth. And when we look back a decade and measure these two on revenue growth, we notice that these are not fast-growing companies. And you shouldn't expect them to be fast-growing companies. Investors would be lucky if either of these two were to increase their revenue in the mid-single digits for any persistent period of time. This is 4, 5, 6%. Those would be great rates of growth for Coca-Cola and PepsiCo. More realistically, these companies will grow in the low to mid-single digits, maybe 1 or 2 or 3% over the next decade. But what makes these businesses lucrative is that they operate so effectively that they can generate solid profit increases even with small revenue growth increases. In the most recent quarter, PepsiCo actually experienced a revenue decline, while Coca-Cola experienced a 6.4% increase in revenue. Now, PepsiCo also has a robust snacks division in addition to its beverage segment, while Coca-Cola generates more revenue from away from home channels compared to PepsiCo. Think about the last time you went to a restaurant or a theme park or a movie theater. They probably offered you Coca-Cola instead of Pepsi. That has allowed Coca-Cola to generate better revenue growth coming out of the pandemic because people were spending more time away from home, spending more money away from home, and that had been good news for Coca-Cola. It was the opposite. During the pandemic, Coca-Cola suffered more than PepsiCo did, with a big decline in revenue during some of the quarters where people were locked down at home. PepsiCo still did okay during those quarters because PepsiCo's snack division was doing really well, and PepsiCo has a greater market share for at-home consumption. Looking at cash flow from operations to sales over the previous decade, Coca-Cola has persistently outperformed PepsiCo in this regard for the better part of the last decade, save for a brief moment in 2024 when that trend reversed. That being said, Coca-Cola and PepsiCo have experienced declining cash flow from operations to sales numbers, and numbers around 14% on CFO to sales is not that great to begin with. I would have liked to have seen better growth in this regard, and I wouldn't be surprised if Coca-Cola returns to its north of 20% margins on this metric in the near term as the company adjusts to some one-off cash flow expenses it had to go through. These are not recurring events. These were things that happened just one time for the company, and going forward, they will not have to experience those declines in the future. The returns on investor capital is a close call. They're both right at 15%. for the most recent period and have remained around these levels. I would say looking back over a decade, they've both demonstrated small improvements, but improvements nonetheless. And at 15%, these are reasonable numbers, especially when you compare with their weighted average costs of capital, which are less than 10%, and the return on invested capital compared to the weighted average cost of capital is positive. It's almost 2 to 1 for each of these two companies. So now let's look at valuation. When I did my discounted cash flow calculation for Coca-Cola, I found its intrinsic value per share to be $108 compared to the current market price of $72. And I mentioned the weighted average cost of capital is just 7.5% for Coca-Cola. So its ROIC to WACC is nearly 2 to 1, which is a great ratio, especially for a company that's growing so slowly and it's in the beverage category. When I calculated the discounted cash flow for Pepsi Cola, I found it to be worth $149.99, so close to the current market price of $149.67. And like Coca-Cola, Pepsi Cola has a low weighted average cost of capital, just 7%. And when you do the ROIC to WACC calculation, PepsiCo has a greater than 2 to 1 ratio compared to Coca-Cola. When I look at valuation measuring by the forward price to earnings, PepsiCo looks cheaper at a forward PE of 17 compared to Coca-Cola at a forward PE of 22.5. So valuation for these two is really close. In one respect, when I look at the forward PE, Coca-Cola looks more expensive than Pepsi-Cola. On the other side, when I look at my discounted cash flow, Coca-Cola looks cheaper than Pepsi-Cola. So it's a close call between these two companies. If you're on the fence, my best suggestion would be to do half and half. Go half Pepsi-Cola, half Coca-Cola. But if I had to pick one of these two, I would put my bet on Coca-Cola as being the better long-term investment at current valuations. Hey everyone, I'm excited to announce a brand new private Discord for our channel members at the VIP Discord level. It's a great place to connect with me directly, engage with like-minded investors, and learn more and take your investing to the next level. Spots are limited, so join now before it's too late.